As much as I enjoy buying puts and betting against the market the past couple of months, I also acknowledge that the destruction of the global economy probably still isn't coming. Let me explain. If you spend any amount of time watching finance videos on YouTube, then you've probably seen a ton of videos calling for the collapse of the market. Do you know why they're everywhere? Because they get views. This includes me, who made a video talking about why the market may crash this October. However, the second half of the video actually refutes some of the claims that I made in the first half, and made some points about why stocks may do well. However, I don't think I was clear enough, so this video is sort of a successor to the last one. Stick around, I really think you'll find it interesting. I recommend you watch the last video before this one, which you can find right here, but I'll summarize the first half. Basically, I made two main points. One, despite what Jerome Powell and his infinite money printer might say, the economy is nowhere near a soft landing. Rates will remain higher for longer, and the yield curve is still inverted. Two, the past decade and a half, and especially 2020 and 2021, were quite literally a straight line up. The bear market of 2022 was to be expected. However, because of the acceleration of AI and the advent of
ChatGPT, dude,
the first half of 2023 saw stocks recover. However, this growth is now slowing down, which is why August, September, and October have all been red. The problems that caused 2022 still haven't really been resolved, and I think that the investing hive mind is about to realize that, and we could see a huge rug pull. We failed to break through to new all-time highs back in July, and have since fallen around 8%. 8% is already almost halfway to a new bear market. Okay, so now that's out of the way, let's get to why the market probably isn't going to crash. Probably. In general, saying that the market is going to crash is an extremely profound statement. I can count on my hands the amount of crashes that have happened in the last century. Markets go up slowly, then down quickly. Most of the time, if you bet that the market will go up, you will be right. This is why long-term index investing is a thing. There is always evidence that the market will decline. No situation that we will ever be in will be unicorns and rainbows. There's always at least something wrong. That's just the US economy to you. But, and this is the important part, these fears are usually already priced in. If everyone is already expecting bad circumstances, then no one will be surprised when those bad circumstances rear their ugly heads. I compare the first half of 2023 to 1999, which was the dot-com bubble. However, while they do definitely have some similarities, this time around it isn't as ludicrous. First of all, we have the simple fact that valuations aren't as overextended as they were back then. Right now, AI stocks have an average price-to-earnings ratio of around 25. Back then, internet companies had an average price-to-earnings ratio of 52, which is much more overvalued. Also, unlike the internet companies back then, AI stocks are actually making tangible products utilizing AI. They actually have strong fundamentals. However, I don't think that everything I just said invalidates any of my points from the last video. While AI might not be a bubble just yet, it definitely could be in the future, and it could still lead the way up to a horrific crash in tech stocks. If on any given month there's a 2% chance of a crash, I'd say there's around a 5 to 10% chance right now. I still wouldn't sink your life savings into puts, but I do think that now is a time where investors should tread lightly with their portfolios because you could see some trouble in the near future. Like I said, I really don't like making these type of market outlook videos as opposed to my usual content, but I really just wanted to share my thoughts. That's it for today's video. I hope you found this video informative or at least entertaining. Please like, comment, and subscribe to boost this feed in the cruel YouTube algorithm. There's some free stocks for you in the description, and as always, I wish you all green in your portfolios, and I'll see you in the next one.